Let's talk markets now. And Effiong, ECOP Market Editor, is live in the studio to continue this conversation with me. Now, Effiong, it's the... next week we'll be on holiday for Christmas. So I think we'll have 3 trading days for next week. So how are we ending this week? What's your outlook for the upper week?
We've been positive for more than 2 weeks.
Yes, I think the market is in red today.
But today we closed the week in red.
Wow.
0.36% down. On the back of huge losses incurred by a big bank, Access Corporation. Access has been active in the last 2 weeks, and of course, see what is happening is that fund managers, they are taking opportunity to take profits out of the investment, because in the last 2-3 weeks prices have gone up. So some of them are just keen in to take what they will need to spend during this yield tide, and it is understandable. Having said that, I believe that the end of the trading week next will actually be positive. We've been having it as a traditional, form of trading, the pattern, and I think it's going to, because it has shown in the last 2 weeks, we've seen banking stocks and manufacturing companies, showing strength in their activities. It will be like that. We are certainly going to close the market in a positive territory. So this one is only the effect of huge profit taking. Okay. But actually, we've traded the very large volume of shares, over 400 million. So by every standard, you will still say that the market is really active. It's very active.
What are you looking, what are you expecting, both from the NGX, from investors, as in the new year?
Investors have had serious anxiety throughout this year. It's only this last quarter that we see that many of the sectors, look up very well after what we had in the month of July. Having said that, I think that the dividends that majority of the shareholders are going to get at the end of this particular trading period will be just minimal, because the economy has been seriously battered. For about 3 quarters, we've had a very, very struggling level of activities in the larger economy. Even now, the things have not picked up completely. And so what is even affecting manufacturers, you talk about the management of fuel very seriously. It also spread to the aviation subsector. So the government is really trying to see how to put things well. I read in the paper that very soon we will have a liquid coming out of Port Harcourt refinery. And if also the one from the private complex also comes in, then we look forward to a period where we begin to see relaxation of this, and then particularly we need to support manufacturing sector so that they create jobs, and then we reduce the level of unemployment. Otherwise, what I see at the end of this particular trading session this year, the dividend payments will be just average. The banks may try to, be able to, because they make money every year.
Of course.
But it's not like that with manufacturing companies. And the real sector is what we're supposed to really worry about, because they create jobs, they maintain the economy. We should make them competitive, you understand, with other entities.
I must thank you so much, Effiong. Let's see how it all plays out. We'll keep doing our job here.
With the holidays, we will be here now.
All right, thank you so much. My colleague there, Effiong ECOP, breaking down market figures. Well, let's take you outside our shows now. Chinese internet stocks are slumped on regulatory news to drag Asian stocks down for the final full trading week of the year, while the dollar trembled ahead of U.S. inflation data that expected to validate bets on rate cuts in 2024. MSCI's broadest index of Asian Pacific shares outside Japan gave up gains to trade at 0.3% lower after China issued draft rules that would impose spending limits on gamers, and the index shared 0.6% in the week, while banking shares helped Japan's Nikkei climb 0.2% outside Asia, Markets have been in a festive mood for weeks as the inflation data around the world has shown slowdown in the Federal Reserve signaled it was done raising interest rates. Overnight, U.S. stocks bounced back from a sudden slide at the end of Wednesday's session, and the S&P 500 rose 1%. Latest data from the Office of National Statistics shows that Britain's economy might now be in a recession, which shows output shrank in July to September period, shortly after Finance Minister Jeremy Hunt suggested the Bank of England might cut interest rates to help boost growth. The report also shows that gross domestic product contracted by 0.1% in the third quarter, while economic output in the second quarter shows no growth, a downward revision from a period estimate of 0.2% growth. Although Finance Minister Hunt said medium-term outlook for the UK economy is far from optimistic than these numbers suggest. Meanwhile, sterling rose against the dollar and the euro after the data releases. Japanese automaker Honda Motor's American unit says it is recalling about 4.5 million vehicles worldwide over risk of fuel pump failure. The recall includes 2.54 million vehicles in the United States and comes after the automaker previously recalled 628,000 U.S. vehicles in 2021 and 136,000 in 2020 for the same issue. Honda issued recalls earlier this month over the same issue in China and Japan. The cause includes various models, including 2018-2020 models of Honda Accord, Civic, CR-V, HR-V, Insight, Passport, and various Acura models, among others. Crude oil prices rose as much as 1% today as tensions persisted in the Middle East following Houthis' attack on ships in the Red Sea. Although Angola's decision to leave OPEC raised questions over the group's effectiveness in supporting prices. U.S. West Texas Intermediate crude rose to sell at $74.52 with an upward price review of 0.85%. Brent also experienced an upward margin of 0.84%, selling at $80.06. Bonny Light recorded a decline of 1.50%, selling at $80.80. For the OPEC basket, crude dealers are offering $79.19 with an uptick of 0.92%.